Welcome to the Black and White Finance Expert video series. Today we're diving into the childcare property sector, an asset class that the banks seem to favour, and what's important is there's no land tax for owners in New South Wales. We're thrilled to have James Ruben join us. James is National Director of the Specialised Asset Team at one of Australia's biggest valuers, M3 Property. With 20 years of industry experience, we very much appreciate James's deep insight into the sector. Let's dive in. James, welcome.
Thanks, Pete. It's good to be here, and let's talk childcare centres.
Let's start where the childcare sector is today. What trends are you seeing and what have you noticed over the last 12 months?
Yeah, so in the last 12 months, the childcare sector has really shown a strong degree of resilience. A really interesting phenomena to observe is that the level of resilience compared to other sectors within the property industry. Cap rates are really tight. Yep. There's been lots of rental growth. Mm-hmm. There's lots of government support. We saw a lot of government support in COVID, and the sentiment is investors are like, oh, this is amazing. Government's backing this sector. Let's buy. Okay. So that's kind of the context. Rents are going through the roof, yep. And that's being driven a lot by construction costs because there's demand, the government's backing it, and construction costs are going up. So they're just getting more expensive to deliver. And at the end of the day, tenants just have to pay more and there's demand for it. So that's what's happening. So we've seen like rents have gone up by like 20, 30% in the last couple of years for childcare centres.
Can you tell us a bit more about that rental side of things there? And then also maybe then tell us what's happening then from a government side of things as well there, as what's happened in the last 12 months.
Yeah, okay. So there's I suppose that's two questions. So the first half of that is the rental story that's happened over the last sort of 12 to 18 months. And what we've seen is huge upward pressure on childcare rents. So childcare rents in Sydney, for example, 12 to 18 months ago were probably $4,500 per childcare place. And now we've seen them grow up to sort of $5,500, $6,000 per childcare place. So that upward pressure has been really generated by elevated construction costs. So we've seen fairly strong demand from families that need places to put their kids. And that's generated demand from operators to lease childcare centres, and the delivery of those centres has become more expensive. And so that's really, over time, has essentially translated into increased rental costs. So as a sector, where we see, probably a lot more often than in other sectors, we see the delivery of a lot of new childcare centres that are pre-leased. So typically the way it works is you have a childcare operator, they like a location, they agree with the developer, they sign a lease, and it's only then that the childcare centre is built. So part of that lease negotiation is, at least on one side, they're very cognizant of the construction costs. So that upward pressure on construction costs has really translated into upward pressure on rents. So from an investment point of view, if you're buying a childcare centre or you own one as an investment, there's a pretty positive rental story that we've seen in the past several years. As a sector, a lot of the leases for childcare centres are very long term. So it's very unusual to see a lease term for less than 10 years. And quite often we see 15 or 20 year leases. So once you've locked in as an investor a rent at a particular level, you've got a high degree of confidence that rent will not decrease, that we'll see that kind of growth going forward.
Especially if you can lock it in with, from a contractual perspective, 3% or 2% increases or CPI increases every year.
Yeah, that's right. I mean, there is a risk longer term that you might end up in a position where the rent has grown beyond what the market is doing and what the tenant is capable of paying. But at the moment, that risk seems fairly contained. And what we've actually seen is quite a lot of growth in daily rates and quite a lot of government support. The childcare subsidy scheme in itself, in some cases, it's means tested. So in some cases, it doesn't provide any rebate, but in some cases, it provides up to 90%. So what we see is, particularly in lower socioeconomic areas where the immediate catchment, you have lower income families, that level of security of income for the tenants is actually, it's very high security. So as a tenant, you have people, or you have a tenant business that is partly subsidised and in some cases heavily subsidised by the government. So as a landlord or an owner, you have a high degree of confidence that they're going to be able to pay their rent. So I think all of that has kind of combined to create a lot of positivity in the market from investors, and we've seen continued resilience. You know, where there's I suppose surrounding economic turmoil or uncertainty as a sector. I mean, I personally, I've been surprised as you see auction after auction when the sale prices, when you look at the return or the rental income that reflects when they sell, it's been incredibly resilient as a sector. It's really shown a lot of resilience.
Would you say also, and thanks for explaining that from a government perspective and then also the rents and making that clear, but would you also say that population growth has had anything to do with that? And this is also why, and then you've got cost of living, that's why the government is supporting it, because mums and dads need to work and they need to have their children looked after while they go out and deal with cost of living as well.
Yes, I think it's a good question, and I think there's probably a couple of elements. One is politically, I think that both, I mean, set aside the specific motivators. I think both colours of government, both major political parties have an interest in supporting the childcare sector. So I think politically there's a lot of support there, you know, and case in point, in New South Wales, they're land tax exempt, and there doesn't seem to be any appetite from any party to review that position. So I think there's a lot of support there. I mean, when we look at childcare centres, the funny thing is, like, and I suppose this is really key for investors, is you've got to look very local. Like, you're looking at the catchment, you know. I mean, I've got kids, I know you've got kids, Pete, and I don't know about everyone else, but I would dread driving more than about 5 minutes to drop my kids at a childcare centre. And so a childcare centre that's located a 15-minute drive from my house, I'm not one of their customers. I'm not in their catchment. The catchment, you know, if you're in an urban area, it probably is a 5-minute drive. And if you look at that as an area, like, you can have two childcare centres in the same suburb, you know, 1 kilometre from each other with completely different catchments. And so when we look at a childcare centre, and as you know, if you're an investor and you think you're buying one of these types of assets, when you look at a childcare centre, you should be looking very critically at, you know, what's within a 5-minute drive? How many schools are there? How dense is it? Are there families? Is it, you know, is it dominated by single people, or you know, what's the kind of demographic makeup of that space? So much more so than other types of assets. Like, you're really looking very local. So it's kind of one of those assets where it's very hard to say, oh, well, that one's in a good suburb. Oh, look, it's in the eastern suburbs of Sydney. Oh, that's a great spot. I mean, it might be a great spot, but as a childcare centre, what you're really looking at is what's within a 5-minute drive. And you might have a really excellent catchment, high-performing childcare centre location, and it could be anywhere. You know, the suburban context, like, yes, that's important, but really, you know, if you're really seriously looking at one of these assets, you should be looking incredibly local.
Got it. So that really makes clear, I suppose, like, what's happened over the last 12 months. And also, you've given us some clear pathways there, or even things to consider for those that are looking to get into the market.
Yeah.
What would you, or into this property sector, what would you say is, I suppose, forecasted, or what are your predictions for the next 12 months for this asset class?
Yeah, so as a valuer, I avoid making all predictions of the future. I hate when people ask me what's going to happen next year.
But crystal balling here. What's your thoughts?
I think though, as a general rule, the fundamental drivers in the childcare sector, it's a sector that's like where the properties that sell, the investment properties, it's dominated by private investors, and that's probably because of the price point. Like, we're talking about a lot of these that. You know, if you're looking at central Sydney, a lot of these are, you know, they're sub $10 million. Yep. They're a size of investment that private people can get into, and you see them sell sometimes for $3 or $4 million.
Just back on that. Just want to explain. Is it when you're telling us about price per kid? Is it less kids, less cap rate? Do you want to explain that? So yes. 3 to 4. How many kids would that be? And then I suppose how many kids would it be for like a $10 million childcare?
Yeah, so childcare centres, we look at, the value is driven partly by how many children they're licensed for. So it's a good point, Pete, and probably something that I should clarify is that if you look at one of these, absolutely vital to understand how many kids it's approved for. That really is the measure of value. And when you're looking at childcare centres, that's how you measure them. And when you look at one versus another, you look at how much did that sell for on a rate per child. It's like looking at it in another sector on a rate per square metre. For childcare centres, we look at it on a rate per child. So in the Sydney metro market at the moment, the range is kind of about, it probably ranges from about $80,000 to about $120,000 per child place at the moment. And when we're looking at that, obviously there are outliers outside of that. And when you move out of Metro Sydney, the metrics change. But within Metro Sydney, that's where we're looking at. I think the fundamentals that drive that value is that the buyers tend to be, of investment childcare centres, they tend to be private people, private investors. There are a few, listed property trusts and things that focus on this, but largely a lot of the auctions you see that happen, they're private buyers that buy them. And those people are motivated by, if you're in New South Wales, you get a land tax exemption, you've got a secure tenant, you've got a sector that is perceived to be supported by the government. Yeah. So those fundamentals are unlikely to change in the next 12, 24, 36 months. And I think for that reason, we're likely to see a continued level of resilience. Yep. I mean, whether prices go up or down a little bit, I don't know. And as I said, as a valuer, I don't like to forecast, but I do think the fundamentals that have driven the resilience in that sector in the past 12 months, I don't see them changing in the next 12 months or the next 2 years. Yeah. And so I would expect more of the same, The rental growth might not be as strong going forward, but I would expect to see continued resilience and some degree of growth in the sector in reality.
I understood. So yeah, definitely foundations seem very strong there.
Yeah.
For this asset class.
Yeah.
Well, thank you on that. And I suppose from our perspective now, if we're as a brokerage or as to provide someone that's new to the sector, because we do get people come to us with a lump sum of money and saying what type of asset class we get into. We can't provide the financial advice, obviously. But if someone's to come and ask you, okay, what is there to consider before getting into this asset class, or why should you perhaps consider buying a childcare? What are some things for them to seriously think about? You've definitely given us some highlights there and detailed insights into the sector, but what should someone trying to get into it for the first time think about?
If you're looking at, I suppose, sorry, I'll just take a step back here. If you're looking at a property that you're thinking of buying, yep, which is a childcare centre, you should be very critically looking at that immediate catchment, yep, like what's around it and who's coming into school or into the childcare centre. Are there schools in the area? Are there families? The other thing is the level of competition. Mm-hmm. So do you have a childcare centre down the road from you? If there's a school that's 500 metres away, is there a childcare centre 500 metres on the other side of that? You can get online, searching around, you can get data in relation to what the daily rates are, what the average occupancies are in that area, that kind of thing. If you've never been in the sector before, I would strongly recommend getting some advice, valuation advice, yeah, or some type of advice prior to making a decision. Like any investment property, where you're talking about millions of dollars, I think it really pays to spend a little bit of money on due diligence up front.
Absolutely.
And get that advice. Typically when we're valuing a childcare centre, we would define a catchment. So we would end up with a shape and we'd look at that and say, well, how many kids are there aged under 6 there? Yep. And how many of those kids are likely to require childcare, and what would they pay? How much of a childcare subsidy would their families receive? And I think that while you don't necessarily need every time to go into that level of detail, I do think if you're looking at getting into the sector and you haven't been involved in it before, I think it's worth doing a little bit of that type of analysis and considering those sort of factors, yeah, before you buy something, to make sure, you're going to be buying something with a long lease to a particular operator, and you want to see that are they going to be able to pay their rent? You know, they're drawing their income from keeping their centre full and charging people, you know, a daily rate to be there. And so if you look at something and you think, well, look, these guys are trading their head off, they're full every day, there's a waiting list, they're charging $200 a day to be there, chances are they're going to be very comfortable paying the rent going forwards. Yep. And then likewise, if you go and inspect a centre and it's, you know, half empty, and they tell you, oh yeah, well we're doing all these things to try and fill it, and we're really struggling because there's another centre up the road, and they're taking all of our business. You know, as an investor, I'd be scratching my head and thinking, oh, is this one, you know, I might reconsider my level of interest in this particular centre.
No, that makes sense. So understanding the key demographics and the population in that area, understanding the competition, and if there's local schools also in the area. Your due diligence, very, very important. So ensure you've got the right team on board. And then also what you've just said, tenant strength, or even the new tenant that's to come on board, making sure that they're able to afford the repayments, make sure that they're strong operators, if they've shown history in the space, or if they're new, why are they going to be successful, what's their business plan like. But they're, I suppose, the main factors, if you were to summarise it in some way?
Yeah, I think so. And in terms of tenant strength, you know, there's quite a big range in the market. You know, there's publicly listed childcare groups that have hundreds of centres that operate really professionally. Then you've got very large privately operated groups that might have 50 or 100 childcare centres. Yep. They're run very professionally. And then right down at the other end, you might have like a mum and dad operator who do one centre, and that's the one and only business they're involved with. So as an investor, if you're looking at buying one of these, that should colour to a certain degree your view of the property is the strength of the tenant that you've got. Yep. So I think that's probably a key one. And as you said before, I mean, I can't stress strongly enough, anytime you're buying a property, but you know, particularly if it's in a sector that you're not familiar with, you should be getting, as part of your due diligence, you should be getting good advice. Like, I think it's really a false saving to not do that. You know, and as a valuer, I much prefer having a conversation with someone before they buy something, you know, where they look at it and they say, oh, we're thinking of paying X. Yes. And we look at that and we say, yep, look, that seems totally fine. That's reasonable. That's easily supportable with the evidence. And they go along and they buy it, and that's fine. And that's a much better conversation than, you know, sometimes you end up with the other situation where yep. someone says, oh, I've already paid this much. What do you think? And then you look at the lease and you say, oh, well, these tenants are going broke. This is no good. Your centre's going to be empty. Whatever. Yeah.
I shouldn't laugh, but it does happen.
It happens. So, yes. So I can't emphasize it strongly enough. Like, good due diligence. You don't necessarily need a valuation before you buy a property, but a good understanding of who the tenant is, how they operate, how the market's performing, what the local catchment's like. Those kind of factors should definitely be a top of mind consideration for anyone looking to get into the sector.
No, lovely. Well, thank you very much, James, for sharing your expertise here with us and our audience.
No, thanks very much for having me, Pete. I always like the opportunity to share my knowledge about the childcare sector. So I really appreciate you inviting me and having this opportunity to come here.
It's clear that the childcare sector has some amazing opportunities, but like any investment, you've got to be aware of the risks and have the appropriate team behind you. So due diligence is key. Please do stay tuned for more insights from industry leaders in our Black and White Finance video series.